Welcome to Valley Wealth's quarterly market review for the second quarter of 2010. Equities took a pause after a year-long rally as concerns about European sovereign debt set the stage for a jittery second quarter. After hitting a level not seen since before the fall 2008 financial crisis, the Dow, S&P 500, and NASDAQ each fell far enough during the quarter to erase all of the gains so far in 2010. Not even the small-cap Russell 2000 managed to stay in positive territory for the year, and not surprisingly, the global Dow was the hardest hit. From fraud charges against Goldman Sachs to the Gulf oil spill to financial reform, headlines seemed to crowd out fundamentals. Concerns about sovereign debt took center stage as the Eurozone's own leaders debated whether to bail out struggling members such as Greece. The resulting volatility wasn't helped by the mysterious May 6th flash crash when the Dow dropped nearly 1,000 points in a matter of minutes. Despite generally strong corporate profit reports and an eventual bailout agreement in Europe, the markets never fully recovered. The nation's gross domestic product, otherwise known as the nation's income, slipped back, and even though mortgage rates fell to record lows in May, the housing market suffered as the federal tax credit for home buyers expired. Market volatility continued to lead investors to seek comfort from bonds, which drove down yields on U.S. Treasuries. Anxiety about global debt also helped push gold to record levels and sent the U.S. dollar soaring against the euro. The millions of barrels of oil lost in the Gulf didn't seem to affect oil prices, which drifted lower during the quarter. That helped inflation in the United States remain near zero. In the months ahead, investors will keep an eye out for any signs of a possible double-dip recession, which could affect whether equities continue to slide or get new life. Other potential storm clouds include renewed sovereign debt concerns and the impact of reform legislation on U.S. financial institutions. Possible tax increases in 2011 could prompt investors to start thinking about whether they need to begin adjusting their portfolios now, and of course any movement in unemployment levels up or down could sway investor sentiment. Valley Wealth appreciates you listening to this quarterly market recap, yet you shouldn't rely on this brief summary as financial advice. To determine how market events might affect your own portfolio, don't hesitate to ask questions and get expert help by calling us at 209-579-5900.